as President Trump swiftly responded to China's rare earth export restrictions by imposing a 100% tariff on Chinese goods. Rare earth companies like MP Materials and Energy Fuels surged, since they're seen as potential beneficiaries of the reshoring push. Trump also suspended exports of critical software, possibly referring to advanced chip design software, amidst rising trade disputes. This move follows China's recent ban on rare earth exports, including vital materials used in military tech, which could create significant disruptions in U.S. defense and tech sectors. China's updated export controls aim to maintain its near monopoly on rare earths, adding 5 new elements to the restricted list and targeting semiconductor users. These measures are seen as leverage for upcoming talks between Trump and Chinese President Xi Jinping. Beijing's dominance in rare earth processing, critical for high-tech and military hardware, poses a challenge to the U.S., which has been heavily reliant on Chinese supplies. To counteract this, the U.S. has invested in companies like MP Materials to strengthen its domestic supply chain. These investments are part of a broader strategy to reduce dependence on China and secure resources critical for defense and technology sectors. Despite Trump's tariffs, China's strategic control over rare earths still gives it significant leverage, with global supply chains facing potential disruptions, giving the U.S. further incentive to diversify its supply chains with companies like Energy Fuels, which is ramping up domestic rare earth production. Contributing to the larger reshoring trend, supported by government investments that could continue to benefit rare earth firms as tensions with China escalate. Other market moves related to China concern the antitrust investigation into Qualcomm's acquisition of Israeli chipmaker Autotalks, which specializes in communications chips for vehicle safety. The probe, announced by China's State Administration for Market Regulation, will assess whether Qualcomm failed to properly disclose details of the deal, potentially violating China's antitrust laws. Qualcomm finalized the Autotalks acquisition in June, integrating its V2X vehicle-to-everything technology into its Snapdragon car stack. This move aligns with China's push to standardize V2X communication by 2026. However, the regulatory scrutiny could signal broader pressure on U.S. technology and auto supply chains. Qualcomm's deal with Autotalks had previously stalled in 2024 due to delays in obtaining regulatory approvals. This probe is part of China's increasing scrutiny of U.S. chipmakers, following a similar investigation into NVIDIA last month. Qualcomm, which earns 46% of its revenue from Chinese customers, could face greater regulatory hurdles as tensions between the U.S. and China intensify. In more uplifting news, Qualcomm recently acquired Arduino, an open-source platform for developing prototypes for robots and electronics. Arduino, widely used by students and engineers, will maintain its independent brand under Qualcomm's ownership. The acquisition enhances Qualcomm's presence in sectors like connected vehicles and robotics, offering a development board powered by Qualcomm's Dragonwing chips, helping to support Qualcomm's broader expansion into diverse markets beyond mobile phone chips. To keep things green in the sea of red, OKLO stock spiked to new highs, driven by bullish coverage from Ascencore, which initiated a buy rating with a price target of $175. This marks the latest positive development for the nuclear energy company, following its selection by the U.S. Department of Energy, DOE, for its Advanced Nuclear Fuel Line pilot project. The program will support the construction and operation of 3 fuel fabrication facilities for advanced reactors, positioning OKLO as a key player in the growing nuclear energy sector. Ascencore sees significant potential in OKLO, forecasting a new nuclear age by 2050, where nuclear energy becomes a larger part of the global energy mix. Despite OKLO not being expected to turn a profit until 2030, Ascencore is confident in its long-term prospects, praising OKLO's vertically integrated strategy and technology capabilities in building small nuclear plants. The firm's optimistic view is based on a cash flow model extending to 2050 and assumes that OKLO's reactor buildouts will be largely financed through debt and tax credits. However, OKLO faces substantial financial challenges. Although it currently holds $530 million in cash, its high cash burn rate, expected to increase as the company nears commercialization, could lead to a cash shortfall, meaning OKLO may need to raise additional funds, potentially up to $1.5 billion over the next 5 years, to avoid running out of capital. Yet, optimistic outlooks like Ascencore's are also fueled by backing from international partners, like the Swedish company Blykalla AB, consisting of a $5 million investment to collaborate on technology development and regulatory strategies across the US and Sweden. Similarly, another partnership in the semiconductor and post-quantum cryptography (PQC) space could be fueling big bullish moves in the future, while also relating back to the larger topics of trade tensions and national security. That's because SEAL-SQ formed a partnership with Trusted Semiconductor Solutions, TSS, to develop made-in-U.S. quantum-resistant semiconductor solutions for U.S. defense and government agencies. TSS, a Category 1A trusted accredited company, specializes in high-security microelectronics for national security systems, making it an ideal partner to help SEAL-SQ expand into sensitive U.S. markets. The collaboration will be formally announced at the Quantum Plus AI conference in New York City this month, where SEAL-SQ will serve as a diamond sponsor. It will also support SEAL-SQ's Quantum Corridor initiative, which connects innovation hubs across Europe and the US, focusing on securing digital infrastructure in the post-quantum era. The partnership will initially focus on combining SEAL-SQ's QS7001 secure element with TSS's trusted semiconductor platforms to create a PQC-enabled solution. In the midterm, the two companies plan to co-develop US-made, PQC, embedded integrated circuits, ICs, targeting certifications such as FIPS 140-3 and Common Criteria. Long-term goals involve developing next-generation secure architectures, including chiplet-based hardware security modules, CHSMs, integrated with advanced embedded secure elements. TSS will act as the customer interface with U.S. agencies, leveraging its established relationships within the defense sector while utilizing SEAL-SQ's expertise in quantum-resistant silicon and chip design. Together, the companies aim to address the national security challenges posed by quantum computing, ensuring that U.S. digital infrastructure remains secure as quantum threats emerge. Financially, SEAL-SQ's preliminary revenue for the first 9 months of 2025 reflected strong growth and the company's progress in developing quantum-resistant technologies. For the period ending September 30, 2025, SEAL-SQ reported $9.9 million in revenue, representing a 41% year-over-year growth, with $5.1 million recorded in Q3 alone. This growth is attributed to the recovery of demand for traditional products and 2 months of consolidated revenue from its IC ALPS acquisition. However, the company is still transitioning from legacy products to next-gen post-quantum semiconductors. Looking ahead, SEAL-SQ reaffirmed its 2025 full-year revenue guidance of $17.5 million to $20 million, projecting growth of 59% to 82% from the previous year. The company's outlook for 2026 indicates continued growth, driven by the launch of new post-quantum cryptography, PQC chips, the full consolidation of IC ALPS, and the Quantix Edge project. SEAL-SQ's expanding business pipeline now includes $175 million in potential revenue opportunities from 2026 to 2028. So far, 2025 has been a decent year. SEAL-SQ acquired IC Alps, a French ASIC design firm, enhancing its capabilities in custom chip development. In addition, SEAL-SQ has partnered with WiseKey on the government of Spain's €40 million Quantix Edge security project, focused on sovereign PQC semiconductor infrastructure. The company has also made significant progress with its PQC chip portfolio, including the development of the QS7001 and QVault TPM solutions, which will enter production in 2026. In space communications, SEAL-SQ is making progress through its investment in WiseSat.Space AG, a quantum-ready satellite constellation, which aims to provide secure, quantum-resistant space-based communications. This initiative, alongside the upcoming launch of SealCoin, a blockchain-based digital asset, will help establish SEAL-SQ as a leader in secure communications and machine-to-machine transactions. It's also expanding its Quantum Corridor initiative, adding projects in India, the UAE, and Brazil to build sovereign PQC ecosystems globally, supporting SEAL-SQ's mission to provide secure digital infrastructures and establish a worldwide network for quantum-resistant semiconductor solutions. And with a strong cash position of $220 million, SEAL-SQ is well-positioned to lead in the growing quantum security space, catering to sectors such as defense, IoT, and automotive with its advanced PQC-enabled solutions. For more on stocks and crypto, follow Ascencore. See you next time.